So if you've ever wanted to know what the successful tax sale investors do that most new investors overlook, today's episode is for you. First off, before we get started, my name is Casey Denman. I've been investing in tax liens and tax deeds for well over 2 decades now, and I've been teaching others just like you for more than a dozen years through my videos, books, and comprehensive training platform that operate at TaxSaleAcademy.com. So when most people think of tax sale investing, they think all about buying properties at a discount and then flipping them for a profit. But let me tell you, after 22 years of doing this business and working closely with a lot of Tax Sale Academy members, there is so much more to it than simply buying and selling. And a lot of the strategies people use will just blow your mind. Today's episode is going to be titled Secrets of Successful Tax Sale Investors Revealed. Now, I'll admit, the word secrets has kind of a corny connotation to it, and it might be a little bit over the top, but what we're diving into today are strategies and habits that often go unnoticed by brand new tax sale investors. These are the keys to building long-term success in the tax sale business, things that the seasoned investors swear by, but beginners often don't know the importance of or simply overlook entirely. Now, I'll be breaking down 5 key strategies that, if implemented correctly, can set you apart from the average investor. Let's get right to them. The first one, you should always review tax sale lists. And stick with me here, because one of the biggest mistakes that I see from new investors is they treat tax sale investing as a very occasional effort. I'll look at a tax sale list every now and then, and if something pops out at me, I'll go invest. If you truly want to be successful, you need to make it a daily discipline. Even if you only have 30 minutes a day that you can carve out, that consistency is going to be crucial. Every day, you should be reviewing tax sale lists. You should be analyzing properties. You should be looking for potential deals. The most successful investors that I know, they don't wait for the perfect property just to fall in their lap. They don't wait for themselves just to happen to stumble across a good property. They go out and they seek it. They find it. They are proactive, not reactive. In fact, some of the top performing investors that I have in the Tax Sale Academy, they all have one thing in common. They look at tax sale lists every single day. They scour these lists. They search those lists until they find the next property that fits their objectives, and they pull the trigger. It's a very consistent daily habit for them. That habit isn't just about finding deals. It's also about building knowledge in the meantime. By reviewing lists on a daily basis, you're going to start to recognize patterns, the types of properties that tend to show up in specific areas of the country. What types of properties, what areas are most competitive, what areas and what types of properties you should avoid. You develop an eye for spotting opportunities and potential red flags that'll cost you a lot of money. The more consistent that you are, the sharper your instincts become, and the easier it will get to separate the good deals from the bad deals. I know you might not want to hear this, but yes, it takes work. And if you put forth this work to reviewing those lists every single day, it gets easier and easier and easier to spot the good deals and filter out the bad ones. Number 2, they stick to a plan. Let me emphasize this. Successful tax sale investors don't just wing it. They don't operate on whims. Before you even start researching properties, you need to have a clear path you're planning to take. This plan should act as your roadmap that will guide every decision that you make in your business. Ask yourself all the questions that you need to ask to become a successful tax sale investor and to develop your plan. What type of properties are you looking for? What is your target profit margin? How much are you willing to bid? How much capital do you have? How long can you deploy that capital comfortably? How will you market and sell the properties? What's your timeline for flipping or holding a property? How are you going to deal with maintenance expenses if there are any? Are there any potential property or area specific problems that you might have to deal with or hurdles to overcome? Every detail must be thought out well in advance, from the type of property that you're targeting to the exact steps you're going to take after you win that property. Without a plan, you are simply gambling, hoping for the best. So why is this so important? Why do I emphasize having a plan? Because nothing goes exactly how you expect it in the investment business. In fact, it very rarely goes the way you expect it to. A strong plan gives you that foundation that you have to work from, making it much easier to adjust on the fly when the unexpected does happen. Likewise, if you approach a deal aimlessly, if you're hoping to just wing it, buying any property that you think you can make $1 or $2 off of, you're likely to become emotional. You're likely to overbid. You're likely to lose money or end up stuck with a property that doesn't fit your goals, and then you're trying to find your way out. Planning your investments is the foundation of success. It's not just about preparing for the best case scenario. Obviously, we all want the best case scenario. It's about being ready for the challenges that come with every deal. If this happens, how will you deal with it? If that happens, how will you deal with it? Because every single property does come with challenges. So the better you prepare and the more experience that you gain, the easier those problems are going to be to deal with. Number 3, they rarely stick to one market. Here's the truth that might surprise you. Most successful tax sale investors will not limit themselves to just their home market, to just one county, or just one market. In fact, a lot of the most successful tax sale investors that I have in the Tax Sale Academy will not just limit themselves to one state. When I started investing, I invested only in my hometown county. And I reached an income cap very, very quickly. And many Tax Sale Academy members have found themselves in the same exact boat. There's simply a finite number of properties sold through tax foreclosure systems in any given area. If you only focus on one market, you are capping your potential. You are capping your income earning opportunities. The most successful investors understand this and make it a point to explore other markets. Now, that doesn't mean just go in and jump into unfamiliar areas without any sort of preparation. There's a way to do it properly. Expanding into a new market does require research. It does require work. And I got episodes on this topic here on the podcast and a lot of workshops inside the Tax Sale Academy. You need to learn about the local tax sale processes, the property values, the buyer demands, the trends, and everything else that will impact your success when you go into another area. But it's very important that you begin to expand once you do hit that income cap. Once you've built a system for analyzing new markets, you'll then begin to find the opportunities are only limited by the amount of time, effort, and capital that you are able to invest. You might discover a neighboring county that has less competition, or a region where properties are much more affordable but still offer great upside. By broadening your reach, you open the door to many more opportunities, and you significantly increase your earning potential. That's the only way to bust through the glass ceiling on your income. Remember, the goal is to create opportunity by seeking and developing a pipeline of deals. You should never be hoping to buy and sell a property this month to pay the bills. You should create and design your business so that the money is constantly flowing in. And you can only do this by having many different areas, many different properties that you target. You can't do this by going to one auction once a year in one market, which is usually new investors' home market. Diversify the areas that you invest in, and that will allow you to grow long-term success in the tax sale business. Number 4, speed. In tax sale investing, speed matters. In any investing, speed matters. Successful investors know that you make money when you buy a property, not when you sell it. This means that you must structure your deal correctly from the get-go and then move quickly through that process. Here's why speed is so important. The worst thing you can do is tie up your capital in a property that takes months or even years and years to generate a return. If you generate a 50% return, but it takes you 5 years to sell that property, that's not very good. Every day that money is sitting in a slow-moving deal is a day that money is not working for you. They say that most everybody in the United States will make $1 million in their working career. However, less than 18% or so of households are millionaires, according to their net worth. What's the reason for this? speed. The people with money learn how to shorten the process that it takes them to make that $1 million. So focus on deals where you can quickly turn your investment into a profit. This might mean targeting properties that require minimal effort, properties that you can resell quickly to your buyers list, and properties that don't hog all of your resources. The idea here is to reinvest your capital as quickly as possible, and you do that by finding more deals and have that flow of deals coming in. The more deals you do, the faster you can grow that capital and the faster you will grow your net worth. It is a snowball effect. Each quick, profitable deal builds momentum, allowing you to take on bigger and better and more opportunities. Speed is also all about efficiency. That is why I preach learning how to research properties accurately and efficiently over and over and over again. That's why we train on it so much inside the Tax Sale Academy. Successful investors master the art of moving quickly without sacrificing the quality of their due diligence, and they do this by being efficient. So if you want to move fast, learn to be efficient to start off with. And number 5, you must learn it is an art. It is not a science. And this is something that frustrates a lot of new investors, and I completely get it. But the most successful tax sale investors understand this business, it's an art. It's not a science. Every investor's financial situation is different. Every property is different. Every buyer is different. If you approach tax sale investing as a rigid formula, do this, then this, then this, and equals that, you are setting yourself up for frustration. Yes, there are systems and shortcuts that can allow you to make this process much more efficient. There's systems and shortcuts and checklists. There's all these things that we can use as tools. But at its core, tax sale investing requires some intuition that you will learn through training or experience. You need to be able to evaluate each deal on its unique merits. You need to be able to adapt to changing circumstances, changing markets, different markets, and make decisions that align with your goals. Now, again, that type of intuition does not happen overnight. It comes from experience, both your own experience and learning from others. Over time, you'll find it becomes much, much easier to spot good deals, assess risk, and to find creative solutions to the challenges that you will face. So be patient with yourself. Learn the process. Take the time to understand the market. Embrace the art of tax sale investing. And find yourself a mentor. Find yourself a training program like we offer through the Tax Sale Academy. It's this blend of strategy and intuition based on experience or formal training that will ultimately lead you to success in the tax sale business. There you have it. There are the 5 so-called secrets, in my opinion, of the successful tax sale investors that a lot of people overlook. You should be always reviewing tax sale lists and always analyzing properties. Not only will this help you spot deals, this also continues to refine and better your skill of doing just that. Number 2, stick to a plan. Never buy something just on a whim, hoping that it works out. Number 3, expand to new markets. Otherwise, you are capping your income. Number 4, move with speed. Do not allow yourself to get tied up in a deal that takes many, many months or many years to finally realize a profit on. And number 5, treat this business as an art, not a science. Everything is different. Every investment is different in this business. So you need to be able to learn how to spot deals and how to find those potential red flags. Now, these strategies might sound simple to some of you folks, but implementing them consistently is what separates the top investors from everybody else. Guys, that's all I've got for today. I truly hope this has helped you out. If you enjoyed this podcast, please do me a huge favor and leave some positive feedback on whatever podcasting or video platform you're listening or watching us on right now. These are free episodes, of course. I don't charge a listening fee or anything like that. But your positive feedback truly helps us out in the podcasting algorithm world and might even serve to pay it forward to somebody who learns about this incredible business simply because you took the time to leave a positive feedback comment or tap that 5-star button or that thumbs up button if you're watching on YouTube. And as always, if we can be of any additional help, make sure you check out all the links in today's show notes, including the one to our step-by-step training academy at taxsaleacademy.com. Hey, take care, folks, and make it a successful day. Bye-bye.